as promised, Abneesh Roy of Nuvama Institutional Equities is joining us to talk to us about what's happening in the FMCG universe. Abneesh, hi, good to be speaking with you. Well, when the first cut of Britannia numbers was out, it didn't look impressive. It looked like an inline set of numbers with maybe a mild beat here and there. What has changed in the commentary from the management this morning that you think warrants a 7 to 8% gain on the stock?
Sure, thanks. We are positive on FMCG in general. We would expect sector rotation given a lot of stocks have not really given that kind of a movement last 1 year. Plus, if you see the monsoon is going to be strong, and we do see post elections in general growth rates for FMCG improving. So coming back to Britannia, we were impressed by the quality of the results. So we had in fact highlighted to our investors that Britannia will see strong volume growth in Q4 in our previewed numbers itself. So yes, in this quarter Q4, the volume growth was around 7-8%. What excited investors in the call was essentially three, four things. One is, of course, post monsoon, I think company is looking at a 3 to 4% price hike because last 1 year there has been almost 4-5% negative effective pricing because of extra grammage, because of select price cuts. Second is company is gunning for a double-digit volume growth again starting post the monsoon, and my sense is next quarter and Q2 we will see very close to double-digit volume growth for Britannia. We are already at 7-8%. Third is margins may not see a big drop. So one is, of course, wheat crop this year seems to be a bit better than last year. We wait for more clarity. But company is focusing on growth and volume growth, but said that margins may not see a big drop, which I think is giving a lot of confidence to the investors. Fourth point is the local players have become a concern for Britannia. I would say that it will anniversarize in Q1. So that will be behind as a risk. And after that, Britannia will continue to gain market share. It is gaining currently also. Fifth point is companies focusing on a lot of tech projects. So a lot of artificial intelligence, data analytics, etc., which will be clearly a disruptor in FY26. It may not have much of an impact in FY25. So overall, we are quite positive on Britannia. We are positive in general on FMCG because of the reasons which I mentioned.
Positive on FMCG, positive on Britannia, like the volume growth prospects, the margin stability, and the fact that market share is something that the company is focusing on. That was about Britannia, but it seems to be a completely different story when we look at the earnings from Titan this time around. Jewelry segment margins have disappointed yet again. Gold prices are on the rise. What's your anticipation of Titan prices, the stock prices going forward? Because if I have it right, you have downgraded the stock this morning.
Yes, absolutely. We like the company structurally from 2 to 3 years perspective, but from a 1 year perspective, we downgraded the stock because in our view, in first half, the results will be a bit muted at the earnings front. So 4 or 5 key reasons. One, because gold prices have moved one way up. Some customers are delaying the purchase. Second is because a lot of the local organized players don't do gold on hedge. When gold price moves up, they enjoy a lot of inventory gains. Due to that, the competitive intensity has gone up in the sector, and Titan is also offering more promotional intensity, more programs to the customer so that they can grow strongly. Third is investors have more options because Kalyan Jewelers also is doing very well, in fact, growing faster than Titan currently. So I would say that because of the margin pressure in the first half in Q2, if you see, base of margins for Titan is very high. The growth rates for Titan will be a bit muted. So I think some more correction can happen and then some time correction. From a 1 year perspective and 2 year perspective, I think things will pan out better in the second half. Eyewear continues to be a struggle for Titan. So we have seen that Lenskart continues to be the big player there and disruptor there. So that remains a challenge for Titan. So overall, number of marriage days are also low in Q1. So all this makes the results near term a bit challenging for Titan, and that's why there is a cut. We cut our EPS by 6%, and we downgraded. We'll prefer players like Trent. We also like Avenue Supermart from a 1 year perspective than a Titan.
Positive on the whole FMCG basket like Trend and Avenue, but not as much on Titan given the next 6 months are going to be challenging. Thanks, Abneesh, for making time and speaking with us. Appreciate you joining us.